Hey, welcome to Abbotsford Icons. Welcome to our first episode. Today I'm excited to sit down with my friend and colleague Alex Kotai with Your Mortgage Sources. Alex, welcome. How are you doing, buddy?
Good. Nice to be here today.
Yeah, why don't you start with telling us a little bit about your organization and what you do?
Oh, I'm a mortgage broker,
Yeah.
that, and I've been doing this since 2006.
Wow.
So, that's roughly 18 years or so.
Yeah.
Grown it from single person, just being me,
Mm.
to a couple underwriters, admin staff, and then over 70 brokers right now.
Wow. And what made you get into the mortgage industry?
I went to university, did my business degree. Okay, so that was the first thing in accounting. And at that time, I was like, okay, do I continue on with accounting?
Yeah.
Which was going to be a 4-year degree plus 3 more years. And then I thought, I want to go work with numbers, but I don't want to do more schooling at that time. So I left university, got a degree.
Yeah.
I thought I'm going to go into banking. So I went to banking and was an account manager, managing people's, finances. Went to managing, and then I want to go on my own and develop my own business. And that's kind of where it started.
Got it. And where did you go for university?
UFD here in Abbotsford.
Yeah, awesome.
I did 2 years in Kelowna, and then 2 years here, and did my business degree with a major in accounting.
And have you noticed big changes in the mortgage industry since you got in?
It's been a wild times, really wild in terms of if you remember back in 08, 2008, there was a financial crisis that tightened up lending. We all thought that was tight, but then every year since then, they keep tightening, and the rules have not really laxed up since that point. And in fact, lenders have slowly taken away programs, where they had programs before were easy to get financing, like, oh, we'll waive your income, this or that.
Yeah.
Everything is slowly tightened up as time has gone on, especially in the last 3-4 years, because the government's really worried about people borrowing too much money in relation to their income, right? So,
And what's the biggest challenge that you find with your clients that come across you that they're facing when it comes to getting a mortgage? Even to break it down, let's just talk about first-time home buyers, because I know the mortgage.
so challenges they're facing today.
Yeah.
Let's say today, there's always challenges for there's always challenges for borrowers, okay? Like that have been around for 10 years, 15 years. Those challenges that have been around a long time include self-employed borrowers who, write off expenses, but don't show enough income. So that's been there for a long time. It's still there. So when we have those types of borrowers, we have to go to some alternative lenders sometimes to get them financing, right? So self-employed borrowers, that's been a challenge all along in history. People with damaged credit, same thing. Like you've always have a certain segment of the population that has their credit, it's damaged. Life circumstances, or they just don't pay attention, right?
Yeah.
But first-time buyers, the biggest challenge now is the market, the pricing of the market. The market is still, where the prices are, right? They're not at their peak, but they've come down a bit, but not substantially where they think, oh, I can afford a place, right? And rates are, compared to like the lowest of lows, they're still, half the way up the chain. So rates are still a little bit high for what they think they want them to be, and prices are still there. So qualification is hard. And there's also something called the stress test, right? So they got to qualify at rates 2% higher than what they're actually paying, right?
And I think a lot of things that people don't realize when they're reaching out to a mortgage specialist is working with the traditional bank versus working with the independent mortgage broker. So can you talk a little bit about the freedom that you have versus if they were to work with a bank?
Yeah, like for myself, I'm not tied to any bank. So let's say I've got 20 different A lenders, banks, credit unions, and the like ones. So to me, it doesn't matter where I go. I try to get my best deal for my client. That's my main purpose, and to get the deal approved. So what happens is they come to me, and let's say your top 20% of clients, they could go anywhere. Like they could go to bank A, bank B, bank C, like anywhere. So then it's just a matter of where can I get them the best terms.
Yeah.
But then other than those 20%, there's like another 80% that some only fit a certain mold, right? Like, oh, maybe they're going to go to lender 1, 2, or 3, but the other lenders don't qualify them, right? So then that's what I got to figure out. And so the nice thing about us is that, we'll figure that out, and we'll get them those 3 lenders, and what are the rates there and what are the terms there, right? Versus the client's got to go dig around themselves and try and figure that out, right? Like, okay, go to ABC Bank, I got turned down. Go to XYZ Bank, I got turned down. And people will come to me after being to 2 or 3 banks having been declined and think, I'm done because they told me no.
Yeah.
Right? But it's like, well, maybe the answer is no, but maybe the answer is yes, and you just met with the wrong people. right? So it's never like set in stone. And we obviously want to get a deal done for them if the deal makes sense. Like if they can afford it and if it's the right thing for them at the time, we want to get the deal done for them, right? Because then they get into a home, they're happy, you know, and we all benefit because, you know, we get a deal and we potentially get more clients down the road and, you know, and they get into their home that they want, right? You know, so.
And coming back to the question about first-time home buyers, I know even with my own practice, when I'm helping first-time home buyers, the biggest challenge they face is having the down payment. So in your practice, are you noticing young first-time home buyers, are they getting help from mom and dad in their application?
Yeah, some of them are. I mean, lots of first-time buyers have some sort of savings.
Yeah.
Right. So even if you're trying to buy, let's say that condo for 400,000 or 500,000, you need about 20 to 25,000.
Yeah.
So lots of them have 5 or 10,000 kicking around. They're just, you know, it's just a matter of can they get the extra from family, and lots of family are around to support them.
Yeah.
You can also borrow part of the down payment or all of it if you want. Like if you need like 5 or 10,000 more, you can get a loan or a line of credit. So.
And I think a lot of times when you talk to parents now, one of the things that are most common that you hear out of their mouth is my kids will never be able to buy a house. But I don't think they realize that, in today's time, when you're buying a home for your kids, their first step is that they're going to be buying a condo, buying the townhouse, then working
Yeah,
home, right?
that psychological thing about, oh, they have to own a house. That's not necessarily the way it works, right? It's like work your way up through the chain, right? Get into a first-time home. Maybe it's a condo.
Yeah.
That's okay. There's lots of condos around. And then work your way into the equity 3 to 5 years, and then maybe a townhouse or maybe a house, depending on what you've got for income or market appreciation, right? The only way you're going to get into that house is to get some market appreciation in your first home.
Yeah.
Because that's how you get that tax-free money. Like, you know, you buy that condo for 400,000, then it's worth 550 one day. Well, now you got $150,000, right?
Yeah.
But to save that up will take you 20 years.
Exactly.
Right. So it's like you buy this investment, you live in there, you got to live somewhere.
Yeah.
And then it appreciates, and that gives you that bigger down payment rather than trying to save for that down payment, which is almost impossible.
And also at the same time, you're paying down your monthly mortgage for that asset that you own. Whereas if you were renting, you're always worried about getting a letter in the mail from the landlord saying that, hey, we're moving in and you need to move out. And after a couple of years, you know, rent prices keep
They're selling. Yeah, they're selling your home that you're living in.
Yeah.
Or, yeah, they're increasing the rent. You know, all these things can happen because you're not in control of that property anymore. But just further to like the initial investment, the sooner you get in, the better.
Yeah.
Like nobody's ever, you know, really regretted buying a home in their early 20s, because at the end of the day, hey, even if you hold that to your 30, you got an 8 or 10 year period, you buy your early 20s, you're going to have some sort of appreciation. If you get no appreciation of the price, your mortgage is paid down.
Yeah.
And that's your nest egg you're building up, right?
Yeah.
And it's tax free.
And one of the best things, funniest things people always say is, when's the best time to buy real estate? And me and you usually have a common response. So, well, the second best time to buy your first home was yesterday, and the second best time is to buy now, right?
It's like being any investment. The longer you hold it, the greater there's no 100% guarantees.
Yeah.
But if you buy a stock or a bond, you go in the stock market, the longer you hold that for, all you got to do is look at historical numbers, right? And the longer you hold it for, the greater the chance you're going to make some money on it, right? So there's people that I know that wait till they're 40 because they want to save money, right? Well, you know, you may have lost 10 or 15 years of, you don't have the asset to appreciate, right? You know what I mean?
And what are some documents that first-time home buyers need to submit to you when they're getting pre-approved? Because I know you send them an email.
Yeah, it's pretty simple. Like if you're an employee, it's usually a job letter, a pay stub, and T4s. Self-employed, it's tax returns, 2 years of tax returns, and your notice of assessments. That's usually the income portion of it, and we'll work it from there. And then we'll do a credit check and make sure your credit's okay.
And how long is the pre-approval valid for?
Up to 4 months.
4 months.
Yeah. And that's just a rate hold. We're gonna assess your financial situation, give you a number and a rate hold if you want. Once you got that rate hold, it's like you can shop. If it expires, there's no disadvantage to you.
Yeah.
The actual advantage is if rates go up, because rates go up and down all the time. If they go up, you got a rate hold. If they go down, you get a lower rate. You get the lower rate automatically. So
I know everyone has a favorite client that they like working with. For you, is it first-time home buyers or your investors that you love helping add an investment property to their real estate portfolio?
I like them all, but first-time buyers are kind of special because it's like, for them, they're very appreciative because this is their first big asset purchase in their life.
Right.
And it's like Christmas to them, honestly. at the end of the day, it's like, oh, they're getting this special, this is their home, right? You move in, you get furnishings, and it becomes yours, right? Like you truly make it yours, and that's something you can cherish forever. Like this is our first home, right?
That being said, like, it's cool too, right? Like, your first-time home buyer could be a young couple. It can be a young couple where they're expecting their first baby, so they're excited. So, and they're buying the home to build memories in, right?
Even people like, even people like in their 50s buying their first home who just, decide to save money or never had life circumstances ready, buying their first home in their 50s.
Yeah.
That's still a great moment for those people. And they're very, very appreciative because, they finally, oh, I'm out of renting now, right? And now I'm into a home. It's a great experience, right? Like to walk into your home and like, this is mine. Even if you have a mortgage on it, it's yours, right?
And another question for you is, why did you pick Abbotsford as your home base?
I simply was here to go to get my degree, to go to school. And then I liked the community, right? I was like, oh, this is a great place. And decided, okay, I'm going to work here. I got a job here. And then it's like, okay, once I became self-employed, you heavily invest in your community, the people advertising, all this stuff. So it's like it's very difficult to like at that point, oh, I'm going to go somewhere else. And I love the community. So it's like, why would I move, right?
Where were you originally from, Alex?
Kitimat. It's a small town.
Yeah, up north.
And I love that place too. It's just, at the end of the day, it's like you can only grow so much there if you've got your own, especially this type of business, right?
And I know community is important to you outside of mortgages. You're involved as a hockey dad. So you want to talk a little bit about that?
I love hockey. I play a lot of hockey. And so like I do a lot of community, like let's say sponsorship. So like every month I pick a charity or something that I donate to every month. So they get some sort of donation to, for the food bank, or I've done Sarah for women and all this stuff. And then every year I run a hockey tournament. It's coming up at the end of May.
Oh, awesome.
That tournament is where teams are competing for a charity. So the winning team is going to get $10,000 towards their charity. Okay, which is kind of cool. It's like you're actually competing for something other than yourself. The winning team is going to get $2,000 themselves, but they're competing for $10,000 towards charity. So this is year 5.
Yeah.
And the previous 4, so we've given away $40,000 so far, $10,000 a year to 3 different charities so far. Because of the 4 years, one charity got it twice. It's a cool experience. Lots of pro hockey players come out, and so it's a really intense event in terms of the hockey, but also it's like, what are we here for? We're here to compete for something that we believe in, right?
Oh, that's cool. That's really meaningful. So I know, like in our business, we help a lot of clients, but at the same time, when you get to do things outside of your job where you're involved giving back to your community, I'm sure that brings you a great sense of happiness. And
100%. Like it's like, like I used to be an employee working in a bank, and with that, you only had so much financial resources, let's say, to give away. But now it's like I'm self-employed. I can take more time and give away more, so that's really, really impactful for me.
Cool.
Yeah.
Another thing that I want to talk about is kind of my passion myself. I love investing in real estate. I love working with investors. What are some tips that you can share with investors that want to buy their first investment property?
So after they've, let's say, bought their first home, like looking to move on. Okay. So the biggest thing they would need to know is when they want to buy a rental property is they need 20% down. Okay. So on your owner occupied home, you don't want that mortgage to be as small as possible, because you want to be able to, let's say you go to buy a home and you have, I got 40% down or 30% down. What I would suggest is taking the biggest mortgage you can, right? And keeping out, if you want to buy a rental, you're going to need that money to buy that rental. Like if you want to buy a rental condo for $500,000, you need $100,000 down, right? So don't pay down that mortgage as quick as you can, because you need that money to leverage to buy this asset. And then, but people are saying, well, maybe I got more debt now. But now you have a second asset, right?
Yeah.
And so if assets are appreciating, let's say they appreciate at 5%, right? Well, now you got 2 assets appreciating at 5% and only a little bit more debt on your personal residence. So it makes you money overall, but you need to have that 20% down. So start thinking about it like, if you bought your first home and you want to buy a rental in 3 or 4 years, you got to start thinking about that number.
Yeah.
How am I going to get that number? I'm going to, save money, or I'm hoping for appreciation in my home. What am I going to do to get that number, right?
Yeah. And I think a lot of now is what we're seeing in our current market, people that have been investing, that have bought their first, second, or third investment property. Those people have moved to the sidelines. I see that in my own practice. But the people that are excited about the investment market are those folks that they own their principal residence. Now they're thinking about getting into the market because they believe in the Abbotsford real estate market long term, and they know that real estate is still one of the best ways to build wealth in this country.
100%. The key is to start thinking about it.
Yeah.
You know, start thinking about it right away because you have to plan for it. It's not the same as your personal residence where you get in with a minimum down payment, right? You got to really plan for it. And it's a valuable thing because the more assets you own, the sooner you're going to become, independent and, be able to be like, okay, I could retire if I want to right now because I got all these assets bringing money in for me.
And I think, Alex, for a lot of people in our community, right, like financial literacy, it's really important, especially for young folks now. I think we're in a world now with social media, instant gratification.
Yeah.
And so I think it's really important, even with my son, who's 3.5, what I teach him is the financial literacy skills, the difference between an asset and liability. So I'll ask him, hey, what's an asset? And they'll yell out real estate. What's a liability? The car. But those skills are transferable because, hey, you might have a good paying job now and you're going to work at that career for 20 to 30 years, but you want to be thinking outside of that to get ahead, right? That we're talking about.
100%. Yeah. And that's hard. If
Yeah.
you're 20 years old, it's hard to think about what are you going to be like at 40, 50, 60, right? Like it's hard, you need to sit down with somebody you trust and be like, okay, what do I do here? Like if I want to be, not to say you want to retire, because maybe like I personally don't want to retire. Like I think I'd be bored, but I want to be at the point, like, oh, at what point am I like, I don't have to work, right? Or I just enjoy working and I could live off my assets.
Yeah.
Right. And you want to think about that, right? Think about what does that number look like, right? Like if I want to be independently wealthy, but I still have the choice to work or run my business or go volunteer and, because there's all sorts of things you want to do in your life, right? It's not always about, oh, I just want to work to this point, retire and,
Where do you see your business going in the next 10 to 15 years?
10 to 15 years. That's a wild time. If I look back 15 years, I'm like, I couldn't even imagine where I am now. So it's been great. So now when I look 10 or 15 years out, it's just to grow my brokerage so that it's actually a true business I run and I really enjoy running, where I got many more brokers, I guess you'd say, right? And I'm helping them grow their business. That's my ultimate goal. So I have a major thing I've invested in and that people can be successful at, right? Not just clients, but, brokers. So, yeah.
And where do you see Abbotsford in the next 10 to 15 years?
Well, I guess population wise,
Yeah.
I was looking it up the other day. I think we're at 170,000-ish or 180,000-ish. I can't see it. I can't see it going anywhere but going up, like well over 200,000. I mean, at the end of the day, the freeway is gonna hopefully become unclogged here.
Debatable.
It's debatable, but it is getting better, right?
Yeah.
At the end of the day, right? Like it's like the traffic is getting. I mean, they're widening that freeway.
Yeah.
Hopefully, we have some better transit, and we have a lot of land out here, right? For building, and I think it's a matter of getting that land being built on, and then opening it up for more industries. Like that's once you get that, you get more jobs, and you get a whole vibe of like growth, right?
And you would be surprised, Alex, like from the first-time homebuyers that I talk to on a regular basis, or sellers that are even considering moving from Surrey, Langley, Lower Mainland to Abbotsford. When they come out here, they love it.
Yeah.
This city is always on their top 3 list. But one of the things that holds them back is that the wife or husband works in Langley or Surrey. So that commute time that they're worried about is one decision where they decide not to move here. And I think if we could figure out the transit infrastructure, the sky's the limit for Abby. And I truly believe that.
Right now, I believe it's that freeway. Right, because we all know what it's like to drive in that freeway when there's something wrong.
Yeah.
And there's almost a daily occurrence of like, oh, this is clogged up or this is. So the more lanes you got in my world, along with mass transit, you're going to have growth, right? And that maybe is 5 years down the road, but you're going to have more growth, right? And more comfort in like, oh, I can get to Langley in 30 minutes. I can get to Surrey in 40 minutes, right? It's like, that's not a big deal, right?
I think also like the attractive piece about living in Abbotsford is being a smaller town in comparison to being in Surrey, Burnaby, Vancouver.
Yeah.
And then having the country living, right? Like
Yeah.
you're 2 minutes drive to the Huntington farm area and you're a 2-minute drive to being in the city. So we get a combination of both here.
Yeah. I mean, if you drive through downtown Abbotsford or even on South Fraser Way, there's a lot going on in terms of business and traffic. But then, like you said, right, you're 2 or 3 minutes, oh, I'm off of here and I'm into farmland,
Yeah.
right? And, there's not many cities like that, right? And I consider it to be a city, but also very relaxed in some ways, right?
We've talked a few times in the past, and I remember one story, if you don't mind me bringing up, you're on driving stand.
Oh, way back.
Yeah, what was that for? You want to share that with our audience?
I'm a fitness guy.
Yeah.
So I developed an online fitness program. So it was cool. I got to go there, present it in Toronto. And with the Dragons at the time, this is probably 10 plus years ago.
Was Kevin O'Leary there?
Kevin was there. Yeah, Kevin was there, and Robert Hershevek and Jim Treliving. Arlene was there, and I believe the last guy was Brett. Brett Wilson. Yeah, so got to present it to them. Actually, I got a deal, like on air, got a deal.
Yeah.
It didn't end up airing because the presentation was too clean in that they weren't, there was no drama to it. It was like I presented it, went back and forth, I got a deal. And then it took a year to like, it was a deal on air, but not a deal, it's like, oh, now you got to go negotiate. And another year of negotiations behind the scenes. So it was a really cool experience to be in the studio. Like, because when you watch it on TV, you see just a small fraction of the area. And then, but when you're there, the studio's massive.
Yeah.
There's hundreds of lights above and there's people around everywhere that you don't see on TV.
And are you still in contact with the Dragons up till today? No.
No.
Yeah.
No. Strictly focusing on this business.
No, that's good. And I think, Alex, one of the key things that I respect about you and your business is client relationships is a priority for you guys. And you do a good job. Just Google your business. You guys are at 519 Google reviews now?
It's over 4 or 5, yeah, 5-star reviews, yeah. So it's like, not every transaction is perfect, as you know, right? Like some stuff is out of your control. Sometimes, I mean, we're the middleman with lenders. So we're trying to be, you got a client here, you got a lender, and you got us. And, we're in the middle, lender's over here, right? And you're trying to make that process as smooth as possible. And sometimes you got a lender who's, giving us onerous conditions, or you got a client that doesn't have the documents. So you're trying to make that whole thing go smoothly. And like, I never go into a transaction and feel like I'm not giving it my all. Like, so it's so easy to be like, okay, like my conscience is clear. And when a client comes to me, even if something goes sideways, I'm like, I know I tried my hardest, right? Like, because not everything goes perfectly. So that's so easy for me in that it's either in you or it's not in you. Like, people in the business, your business, my business, who are, maybe it doesn't matter to them as much, right? They're just more based on, the transaction. But I'm just like, hey, I want this to be smooth. I want them to be happy. I want them to get what they want in as much as I can control it, right?
So you're in the customer experience business, just like
Yeah. I don't think it's really hard.
Yeah.
Like, if you just care about people, it's not hard at all. Because it's like, if it's in your conscience, if it's in your moral standard of how you treat people, it's just there, right? But if you have shaky standards or you have morals that are like, less than that, then it's easy to fall off the cliff, I'd say.
And I think that's what separates the top mortgage specialists, the top tier realtors are the people that are the top 1 or 10%. These people here are focused on building relationships and providing value to their clients.
Yeah.
And that stands out, right? So that's why people are attracted to the mortgage specialist or the realtor. And once they have a good experience, they're going to go tell their family and friends that, hey, if you need help with the mortgage, reach out to Alex. If you need to refinance, reach out to Alex, or if you need a realtor, reach out to Gary. And and it's funny because a couple of months ago, I was at my best friend's house. He's like, "Oh, how do you like real estate? Like, what is your day-to-day job when you're helping sellers and buyers?" And when I answered that, I was reflecting on that. I had said it would just come down to one word: experience, and 2 words: customer experience. Because now anyone can sell a house, anyone can do a mortgage.
You can do the paperwork, right? The paperwork's there.
But
what is it you're doing on the side?
What's going to help you get to the next level is going to be the customer experience for the client.
Yeah. I totally agree. And it's not It's not really that hard.
Yeah, it's not.
Like if you're there and you're there with a customer and you just say, well, if this person was my immediate family member, father, mother, aunt, uncle, grandparent, like how would I treat them? How would I handle them? It's not really, really hard. But stuff can still go sideways, but it's like, but if you're there and you care about them, you're going to try to make it as best as possible, right? That's what
And another thing is, Alex, is like when people are buying the home, what sometimes they do is they work with like a family or friend. And when they buy a condo or a townhome, one of the most things that they overlook is the strata documents. And where I'm going with this is recently I helped a first-time home buyer buy a condo here in Abbotsford. I'm not going to share the address, but when reviewing the strata documents with my clients, it became apparent there was a few units for sale in that complex where the owners were exceeding the occupancy limit. So for a 1-bedroom unit, you're allowed 2 people. For a 2-bed, 2-bath unit, 4 people. And there was a couple of units for sale now because these people weren't aware of that. So that comes back to the customer experience. Like, what are you doing? And now if they are selling someone overpaid, they're going to be losing money.
Yeah.
Or they're going to be renting a second home to house the other family members.
100%. Yeah. You got to know your stuff, right?
Yeah.
Do your research for your client, right?
So let's go to the lightning round, Alex. These are just silly questions that I asked my guests. The first one is if you could give one practical advice to a young person, a business owner that can help shape their life in a positive note, what would that be?
Let's say if we're talking many things, but if we're talking, let's say finances, right? Just have a plan, like set up a plan and dream big at the start. If you're 20 to 25 years old, right? Decide what you want to have when you're 25, 30, 35, 40, like in 5-year increments. Just write down what you want to have, right? And then you're going to work your way backwards from there. Okay, how do I get to this?
Yeah.
How do I get to this? Like, what does that look like? And you're going to need a professional like you to say, hey, look, if they're like, hey, I want to own 5 properties by the time I'm 50, go talk to you. Go talk to Gary and say, hey, look, how do I accumulate 5 properties when I'm 50? How do I accumulate, let's say, a stock and bond portfolio? Talk to an investment advisor, right? Talk to a mortgage person if you need to. Hey, how do I borrow money? Like, how do I get my credit established, right? Like, so set up a plan. And then there's like probably 4 major professionals: realtor, mortgages, investment advisor, and probably insurance.
Yeah.
And I get insurance set up right away too. Like I'm talking life insurance because it's as cheap as possible. The life insurance is cheap when you're young, right? If you wait till you're 40 to get life insurance, much more expensive. So I would pick those 4 professions, set up a plan and say, hey, how can you guys help me? And we both know people in all those industries that can help people, right?
No, that's awesome. And for yourself, let's just take it one step further, right? Like if people do you want a little bit more advice, do you recommend that they read books, listen to podcasts? What's other way they can get that info?
Everything. Yeah. Like I own, I got a lot of books. I listen to a lot of podcasts now because I can sit there and I can work or I can do, let's say, exercise, stretching, whatever I want to do. And I can listen to stuff and gather information as I'm doing other things. And there's a lot of good podcasts out there. You pick 2 or 3 and they're giving you financial advice or health advice. I would also recommend looking after your health.
Yeah,
like in your plan on life, your health is going to be before your finances. Your health is number 1.
Yeah.
Put your finances second. If you have to look after one of the 2, go with health first.
Yeah.
Figure out your health, because without health, everything else will suffer. Your relationship will suffer. Your finances will suffer. You'll end up spending a lot of money to try and fix your health versus, hey, I'm healthy. I've got energy. I got vitality. I can go and I can do whatever I want in my life. Right. So those 2 areas for sure.
That's true. If a person doesn't have their health, they have nothing. But a person that has health, they have options to live other domains of their life. And just piggyback on what you said about providing advice to young people about finances. I think a lot of misconceptions people have about financial literacy is that it's hard, but it's really not. When you understand the basics, maybe you got to spend the initial 15 to 50 hours of getting the basic information. Once you have that, you can enjoy your life and still be in the real estate market as a homeowner, investor, and these two things go hand in hand.
Yeah.
And they work together.
And like I said, there's there's 4 main types of professionals, right? Well, we're all giving free advice, right? Like if somebody wants to come and sit with me for an hour and talk about borrowing, credit, qualifying. There you go. I can give you enough information in an hour that you can map out your next 10 years.
Yeah.
Same with you. It's like, oh, what do I look for in real estate purchasing, right? You can give them information in an hour. They'll be like, they'll take like, weeks to learn on their own, right? So meet with the right people. Take the courses if you want, right? Like take a course on budgeting, take a course on investing, right? It's not hard, and it can be done on the side of your job, outside your work, and
Yeah, some of the people that I hang out with, my friends, are they're teachers. They work government jobs, but they're the happiest people. But at the same time, they're investing, and so I always crack jokes with them that, hey, when I'm hanging out with you guys, like you guys live a stress-free life. It's awesome, and that should be the goal, right? Like, not money is important, but your life is primary. But money is just a tool there that helps you live a better quality life for yourself and your loved ones and your children as well. Right?
And it gives you stability.
Yeah,
Right. At the end of the day, it's like if you're 40 or 50 or 60 and you have a health issue and you can't work, but if you got some money set aside, it gives you stability so that you're not, going into the depths of the canyon, right, at that time. Meanwhile, when you're flourishing, you're not living too high either, right? You want to be, at the end of the day, comfortable so that you can live a good life, and you're always striving for, like, to make sure you're going forward, right?
What's your favorite podcast?
My favorite podcast? Well, I love listening to Andrew Huberman.
Yeah,
He's a neuroscientist guy, and I love listening to health stuff.
yeah.
So that's my go-to for health. And I'll listen to PBD as well for finance and market stuff.
Now that you said the first guide, and that's one thing that stands out, as I remember from our initial conversations, is if it's okay with you, like me saying, you don't drink alcohol, right?
No.
Yeah, and that was a health decision that you made before?
Yeah, just a health decision in terms of like, I want to be like, I think of my body as a temple. At the end of the day, it's like, okay, whatever I put into this thing is going to work for me in a certain way, right? Mostly everybody I know drinks alcohol, and it doesn't really affect me in any way, and I don't judge anybody for it. But for me, it's like, okay, I'm not putting that in my body. I'm not putting cigarettes. I'm not putting drugs. Nothing in my body. I'm just trying to feed my body nutrients and work out and stay healthy, and hopefully the body, performs well.
Caffeine's allowed, right?
Yeah, caffeine's allowed. Yeah, once in a while, I drink coffee. It's all good. Actually, I think that like everything I've listened to about coffee and coffee beans, let's say, would you say, is that it's actually very healthy for you. It's got a lot of nutrients in it. I think abuse of anything, like if you're abusing caffeine or you're not timing it properly in your day, is what I've also heard about. Like if you're having caffeine at 4 or 5 and then you're having problems sleeping, well, then you're affecting your whole sleep cycle and you're affecting your next day as well, right? In terms of like your ability to work. And
What's your favorite food?
my favorite food? Well, I'm half Italian, so I'm into pasta.
Okay.
Pasta. Probably my favorite meal is chicken parmesan. Yeah. How are you?
For me, I'm a pizza guy. Pizza.
I love pizza too.
Yeah, it has to be Punjabi pizza because they put the right amount of spices on.
Yeah.
And it's just, for me, I could have that every day, but like you said, I want to be quite healthy.
Loaded with vegetables. Like I love a good veggie pizza.
Yeah.
There's a lot of flavor in it.
Yeah. The last question is, Alex, if you could go back 20 years, what advice would you give your 20-year-old self?
I think like, well, obviously I became self-employed. So that would be like, I would do that sooner because this is what I enjoy is working on a business, right? But even if I wasn't running a business, I'd just be like, I would invest more earlier and take a little more risk.
Yeah.
Because, like let's say my risk tolerance is different from everybody's. I'm kind of more in the middle part of the road, not low end, not high end, right? But I probably would have pushed that a little bit more earlier in my life. Pushed my risk tolerance to a little bit higher, and then maybe slowly taper it off, as life, or maybe I would just sit there and be like, hey, I'm at an 8 out of 10 in risk, and I'm comfortable because I've been bearing that for 20 years, right? Versus like, being at a 4 or 5, you'd be like, oh yeah, I'm at a 4 or 5. Because the longer you live with something, the harder it is to be like, get comfortable,
And when you're talking about that, or are you talking about investing in real estate, stocks, or other areas?
Anything. Yeah. Investing in real estate, going into business ventures with other people, stocks, Do I buy like, your staple stock, like what's been around for 100 years, like Coca-Cola, or am I going to go into some small cap stocks that have the potential to blow up, but all the potential to also go to zero? You know what I mean? Like more into that stuff and less into this stuff.
Yeah.
Yeah, a little more exposure, right? But everybody's different, right? There's people that are wild in their investing, right? They just go and they love the highs and lows. And other people, like my clients who are like, no, I want a 5-year fixed rate all the time. And I own a house and I buy large cap mutual funds. And that's all I do, right? Because that's just in their psyche. And there's no wrong way or right way. But for me, I would have been like, oh, take a little more risk in what I invest in.
Yeah, I think it comes back to your risk tolerance. Like one thing that I found talking to my mentors, peers, or other realtors in the industry that I've been in the industry for at least 25, 30 years, one of their biggest regrets for themselves and advice to other people was that they didn't buy enough real estate. So that's resonated with me, that one of the things that I enjoy is I love helping people buy their first home investment property, but I'm really focused on building my portfolio with investment properties just because I know if you can buy a certain number of properties, that will provide me financial freedom down the road.
Yeah. And I think people have to sit down and map it out on paper or on their computer and map out what does it look like, right? If I buy something worth 500,000 a day, a condo, and I hold that for 20 years, is that worth $1 million in 20 years? Safely, right? Yeah, nothing, 2 or 3% appreciation. What does that look like? Okay, so if I buy 2 of those, 3 of those, 4 of those, maybe it's like a little bit of strain on me and it's a little stress, right? But maybe in 20 years from now, I'm like, okay, if I can look at that and be like, yeah, those 4 condos worth 500 grand are now worth $1 million each.
Yeah.
Now I got $4 million of real estate and my mortgages are 3/4 paid off, right?
Yeah.
Like, if you map that out long enough, maybe you'll sustain the little bit of what you feel is risk, right? Right? Or the little bit of uncomfortableness.
And I think now we're in a time where we're dealing with tariffs. A lot of people are reacting negatively, rightfully so, right? People are worried about their jobs and whatnot. But if you look back historically, there's always been a market disruption in each time. 2008, it was the economic crisis in the US. 2020, it was COVID. 2022, it was the interest rate hikes. So what I'm really saying is those disruptions are always going to be there. And the people that can capitalize are the ones being in the market.
Yeah, I mean, I listened to Warren Buffett quite a bit as well, and he's always talking about how when there's panic and uncertainty, if you have the stomach to buy, that's when you make the most money.
Yeah.
And it makes total sense.
Yeah.
You feel like you're carrying on the most risk, right? But it is a reality, right? It's like when things are on sale, right? That's when you make, you go to a store to buy a pair of shoes, if they're $150 shoes on sale for 50% off, right? Like that's, it is what it is, right? They were $150 yesterday. Today, like if you go to the Bay today, right? And the Bay is going into liquidation, right? They're going to have sales, but those things a week ago were full price, right? So it's like the same in real estate or stocks, right? Like you just have to have the psychology to bear with it. Because in the short term, you're going to be holding on to something that you feel is a risk. Yes.
And I think people will enjoy shopping. They can go to Lululemon, Nike, Under Armour, wherever. They'll see a big sale sign, 50% off, and people will run into the store. But if you see that in real estate or the stock market, they're still tentative because they're listening to the people beside them, or their family relatives will say, hey, don't buy. But one of the best things that I found in my practices were my first time home buyers or people that are moving up or investors that got the best deals at that time were people that took advantage of the market conditions in their favor, right?
Yeah. If you have to have a bit of a long-term perspective, right? Because if you're buying right now, or let's say you're buying the stock market right now, the stock market's been down this year. You have to have a long-term perspective. Like I'm buying into something that I know it long-term has value, right? So, but right now has volatility, right? And if you're you have to be okay with some of that, right? Otherwise, you'll never break free in life from just being an income earner, right?
And I think, like you said, you're sharing your story earlier from being employed, going to self-employed. What that probably took you was facing the fear that, okay, that you're giving up a secure job to now being on your own, there's always that possibility. Let's just go with the 1% that things might not work out. But the people that make it are the ones that are willing to take the risk and have the courage to move on.
Yeah, there's an even higher possibility. I'm ranking it. Like I have the stats you read on people starting businesses, like X percentage fail in the first year, X percentage fail in the first 10 years. I don't know. I can't remember what it is, but it is higher than we think it is. But if you're putting in the work and it's like, this is my baby, you're going to find a way, right? Like you're going to find a way. And that's when I left like the banking business, I was just reading a lot of, the main book I read was Rich Dad, Poor Dad.
Yeah.
Which is an iconic book, right? But that was probably the book that got me to leave my employed job. And it was like, and then thinking back though, I went and risked a lot. I spent a lot of money in my first year of the business, like on advertising. Like I spent a ton of money that I'd saved from my employed job to start my business, right? And there were no guarantees, right? You know, but it was like, I read that book and I'm like, okay, this is what I'm doing, right? And just go in. And
I think our book is responsible for a lot of unease for a lot of people. Because for me too, I used to work at a nonprofit where I was helping at-risk kids. And when I was right after I finished university around 23, I read that book called Rich Dad, Poor Dad. And once I was finished, man, like I was fuming. I was like, why didn't I learn this information in elementary, middle school, high school, university? And that kind of got me onto this chartered course of becoming self-employed and building a business where I get to help people. And I want to have it any other way. So Alex, if people are wanting to get in touch with you, where can they reach you?
Okay. Website is ymscanada.ca.
Perfect.
Cell number 604-557-3461 or alex.kotai@ymscanada.ca.
Awesome. Are you on social media as well? Instagram and LinkedIn?
Instagram, alex.kotai, LinkedIn, Alex Kotai. If you just search the last name, there's not a lot of last names that is Kotai. So I'm on there.
Awesome. We'll make sure we put all that information at the bottom of the show notes on YouTube so people can access it on other agencies. My last question for you. How are the Stars going to do this year?
The Stars, well, they're going to be in the playoffs. We're talking Dallas Stars, by the way. They'll be in the playoffs. If they hit a streak, they have a good chance to win it. If they don't, it'll be probably second round.
Well, good luck to the Dallas Stars. Thanks for your time, everybody. Thank you.
Yeah, thank you.